You guys back with another video for y'all. You guys just learned about liquidity sweeps. So I'm going to teach you guys how to identify and just look in the market for how to identify break structures in the simplest way possible. I'll show you what it is, how you can spot it, and how I use it to avoid entering bad trades or have further confirmation for trades. So for me, like I previously said, a lot of traders like to enter off liquidity sweeps, but I feel like that's not enough confirmation when we're trading micro gold futures. I just want to look for more confirmation in my setup, right? So let me tell you how I would trade micro gold futures using breaker structure. So quick disclaimer, this isn't financial advice. I'm just showing you how I personally look at price structure and how I use this price action when trading gold. So what does breaker structure mean? Break of structure simply means price breaks past a previous swing high or previous swing low. So if price is moving down, right, we're moving in a bearish structure. A break of structure could look something like this, where we push past this previous high and our candle closes above it. That's what a break of structure would usually look like. If price is moving up, making higher highs, higher lows, higher highs, higher lows, right? A break of structure would look like this. We would break past this previous low, previous swing low or swing high, right? So that's just a look of how we can identify it in the market. Let's give you guys some texts. Let's just make sure that you guys can kind of understand what we're going through. So we're gonna look for a bullish BOS. Actually, no, let me write it here. Bullish BOS, or sorry, bearish BOS. This is a bullish BOS that we're breaking, and then we have our bearish BOS. So that's something we can take a look for. So we have our bearish BOS, and then we have our bullish BOS, right? So let's go. The reason that breaker structures matter is because it keeps me away from just guessing trades, right? I know for further, when I'm trading, I usually look for further confirmation. What I want to see is that after we sweep a high, I want to see a candlestick closure taking out the swing low, right? The sweep gets my attention, right? I look for that sweep. Okay, we had our accumulation, we had our manipulation move higher, took out all this buy side liquidity. We then sweep this manipulation move, and then I want to look for a nice breaker structure. So right here, this could be identified as a break of structure. So breaker structure is when we want to usually close below a low. It's not a wick. We want to close below it for further confirmation. So let's look for the charts. Let's look for a chart example, right? So here we're moving down. We're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. But then suddenly we have some sort of shift in the market. We're kind of consolidating this area, but right here, our our structure of market changes. We make this higher high, which breaks past this previous high, right? And then we kind of come down. We're on that bearish trend again, but then we suddenly break past it, and then we close above. We wait for more confirmation, and then we have another closure here, and then one final one here. So you could enter off of this breaker structure. You can enter this one, enter. These are all entry confirmations that you can look on the 5-minute time frame or the 1 minute, right? So then price would like to sweep this low here, and then that gets my attention, right? You want to look for that further confirmation. So we have this nice fair value gap, wait for that breaker structure. You could have entered potentially here, wait for that breaker structure, that clean break, where the actual candlestick is above the high, not just the wick, right? So now price breaks above this previous lower high. This is bullish. This is a bullish breaker structure. This tells me that buyers are starting to take control. After that, I'm waiting for some sort of retest or pullback to further into some sort of zone. So this zone could be a order block slash demand zone. It could be a fair value gap. It could be an inverse fair value gap. It could be um, it could be an equilibrium zone. It could be a Fibonacci retracement, right? It could be any of these Fibonacci retracements. Actually, no, I did this one. I have to do it from the bottom. the swing high. So yeah, I would wait for price to come into this range, right? That's probably a key range that I would want price to come into, right? And then after that, we would like to see a nice push higher, put our stops above these highs, and then take your low hanging fruit for the day, right? So that's pretty simple thing. Let's look for a bearish breaker structure. Let's clear out these drawings so you guys can see better. So right now, market makers are pushing the market up. We're having heavy buyers in control, kind of consolidating in this zone for a bit. We're consolidating. Boom, consolidate. We had our accumulation. We had our manipulation move higher. We had our liquidity sweep. Now we want to look for that further confirmation, right? So we want to, maybe we can find it on the 1 minute time frame because the 1 minute time frame can show us more better confirmation. Yep. So we had our liquidity sweep, right? We had a nice fair value gap right here on the 1 minute. We retested into that equilibrium zone, if you guys can see that, right? We retest. We want to look for that clear breaker structure. You could have entered here. 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 But like the most like optimal one is to take out that previous last leg low. That's the most optimal. You could also use a Fibonacci retracement where we do for the swing high to this, the swing high to the swing low. Sorry, from the swing high. So right here, you could do take the swing high. Oh my god, I'm so sorry, guys. I'm so sorry. Um, swing high to the swing low, right? You want to wait for that retracement. If we don't get that retracement, you just look for other confirmation confluences, right? And that's look price just dumps after, right? We just start dumping. This is very easy to say in hindsight after price has been thing, but you do want to forward test this, right? When forward testing, you're not really giving yourself to see what has already happened. You're kind of giving you that self doubt. So it's like really trading, right? So this is what we would call a bearish breaker structure. Okay, so we're gonna look for a real breaker structure versus a face breaker structure. Okay, so for a real breaker structure, I want to see a strong break through the previous swing lower swing high, right? Don't want some like, I want to see a strong candle with probably a close, like I said, a close. If it's like, I want to see probably multiple bearish candles close like over here. We closed, we retested, and we went down, right? So that's what I want to see. I don't want to see maybe like, so this, if you think that maybe, hold on, let's reset price drawings. So if you think that maybe if you're uneducated and you feel that maybe you thought that the wick could count, but no, see how the wick comes below this. This could be used as liquidity sweep to grab your liquidity, right? So we always want to check for that candle closure below, right? So that would be more confirmation. And if we're consolidating like this, you want to make sure that we have our manipulation move before looking for other shorts or longs, right? So that's how we would identify um, breaker structures. That if price like barely wicks a level like this and instantly comes back, I would want to be careful. That just might be another liquidity sweep, right? I want to see commitment, not just a wick. So common mistakes that most beginners make is the first mistake is entering before a breaker structure. A lot of people do this, right? They see their fair value, they see liquidity sweep, they see AMD, they see their supply and demand zone get hit, they see that sellers are starting to take position, but they kind of forget that we're kind of looking for a breaker structure with more confluences, right? So you can't just head into it blind. You really want to have backed up confirmation confluences, right? The second mistake is chasing right after a break structure. If you enter after a huge candlestick, like for example, you enter like here, honestly, just because yeah, Friday we were just selling off, so you could have gotten away. But usually, once we have candlesticks like this, we just want to see your stop loss might be a bit too large, so let's say you're shorting and you entered very late. You're entering here and you, for like a normal trader will put their stop loss above previous highs or previous areas of liquidity, right? There is a really good chance that even if price does come to take you in drawdown, your stop is going to be very large, which means that you're going to lose a lot of money. And let's say you think, oh, I'll just move my stop loss down here. Price can end up wicking this and then coming back lower, you know? So you definitely want to wait for retracements and pullbacks before entering fully. And the third mistake is ignoring higher time frame. Higher time frame holds higher power. You want to look at the higher time frame. You want to see how we're manipulating. You want to see if we actually closed above a low like we did here. If we didn't close above a low, like I showed in the previous accumulation breaker structure, it's just not going to work. You want to look at the higher time frame. A 1 minute breaker structure, a 5 minute breaker structure can easily just be that little trick in the market where the market just wants to trick you, or it could be just market makers trying to hunt your stop loss before continuing the other direction. So you want to make sure that we're seeing that further confirmation on the higher time frames, such as the 15 minute, the 1 hour, and the 4 hour, right? So that's pretty much what you're looking for. So to keep it simple, breaker structure is when price breaks a meaningful swing high, swing low. We then want to look for a liquidity sweep, accumulation, manipulation, and distribution, breaker structure, fair value gap, pullback, and then enter. And then you want to get the low hanging fruit. Obviously, you don't want to be greedy with the trade because greed can kill you. You don't, but you want to protect your capital at all costs, and you just want more confirmation when taking that trade. Now, if you want more clarity against um, these confluences, you want more structure clarity, please join my Discord. I am going to be very active in that very soon, and I will make sure to keep you guys up and ahead. I will be live day trading every single day. You guys can come, just see how I don't want you. I don't want you guys to take signals. I'm not gonna charge you. My goal is to show that this can be made. This trading skill can be learned for free. Obviously, if you do pay, it's gonna be quicker. For if you pay for a mentor, but I just want to show you guys that it's not impossible without a mentor. So that's it for the video, guys. I hope you guys enjoyed my little explanation of a breaker structure, how to identify them within the market. And I appreciate you guys for watching this video, and I'll catch y'all on the next one. Peace.